Hey guys, how are you?
Good, how are you doing?
Hey, Ben.
Not bad, not bad.
All right, so Ben, tell us, what are you seeing in the market that you like or dislike?
Well, there's a lot to like in the market right now. Big moves over the past few days in some of the tier one cannabis names. Now, it seems that perhaps some of these moves are a little bit showing signs of some FOMOing action here. For example, Canopy Growth increased about $1 billion of market cap just on that New York hemp license alone, and there was several dozen issued. So yeah, there's signs of FOMOing out there, but I feel good for investors. Oversold bounce is long due, and we're just recovering some lost ground here.
Mm-hmm. Interesting. So you think that maybe the cannabis market has gotten a bit ahead of itself then? Do you think that this means that we're going to see a bit of a, well, we've already seen it in the chart for weed, that the angle of attack on the incline has started to drop a bit. Is that what you kind of see happening to the general trend in the cannabis space going into the next week?
Yeah, perhaps. I'm not really ready to make that call right now just because we haven't technically received an hourly low in Canopy Growth yet. So there's still a slope of higher lows taking place, and there hasn't been that lower high on the hourly. And for me, that's really the benchmark of what to look for. So yeah, we could easily go up a little bit more, test the highs, perhaps another 10 or 15%. But when you start seeing market caps increase over $1 billion over a simple, New York hemp license, which was very good news, don't get me wrong. But moves like that are usually not the type that I would look to stake long-term positions when those type of things happen.
Interesting. The Green Growth brand story in relation to their offer for Aphria, what are you gleaning from the sort of universe out there in social media? Is there any sort of dialogue around why it should or shouldn't happen in a credible sort of context?
I think a lot of investors are against it. That's the read that I'm getting on the Twitter sphere and some of the things I'm reading. And I think that's mainly because there's a skepticism about a smaller company, an MSO, without too much operating history, bidding up their stock to purchase, a tier one Canadian name. So nothing like this has really happened before, and no company has raised the concurrent financing to up their stock in order to be able to purchase stock of another company in a takeover. So I think you have some skepticism there, and also some long-term Aphria holders are in a higher price point. So I don't think some are enamored with the $11 all share purchase. It's not even cash at this point, it's just all shares. So then, of course, there's some concern whether if the bid is approved, whether retail shareholders could get out at that price. So I would say it's mostly negative right now, but let's see if Green Growth Brands ups their bid offer in the coming days, which is rumored that they might do that.
Okay, so when they first made that announcement, Green Growth Brand stock was in the $4 range, and so making a statement that you were going to raise capital at $7 a share or do the transaction at $7 a share was kind of a source of skepticism for many. And so I see kind of two different sort of constructs at work here. Aphria shareholders want more for their stock than $11, so they're not happy. Green Growth Brands, their share price is continuing to rise. So if I was a Green Growth Brand shareholder, I would be like, well, why are we buying this now? If it's this easy for us to get to $7, why don't we try to do the deal on our stocks at $10 and have a lower cost of capital and less dilution as a result?
Yeah, that makes sense. That makes sense in a lot of ways. You could look at their appreciation of the share price as not creating a urgent moment to put out the offer now. And there's some word that they were going to put out the offer last week, and they didn't do that. So maybe the delay is somehow tied with the stock price, continuing to go up, which would boost their credibility of the deal if they're able to, bring their common share price closer to that $7 range. But yeah, absolutely. Now, some of the questions I have are whether a brands company makes sense with a company that's really built for CPG. Because under the Cannabis Act, as you know, there are stringent requirements for marketing, promotion, and that type of thing, even if it's done in a country outside of Canada, that you could still be sanctioned and lose your license within Canada. So the one thing that never really made sense to me is, why is a brands company taking over an LP that's about to produce 250,000 kilograms in Canada? So hopefully they can explain that if there is an offer on the table, and get more people on board.
Sure. Well, given the sort of forward-looking and forward-thinking strategic history of the management of Green Growth Brands, if I was a betting man, I would say that they're more or less positioning the company in terms of having a source of supply as well as a brand strategy. They're positioning for a future iteration of the combined entity. That's what I think they're doing. And I don't think they're so concerned with the state of the union right now, as it were, because, as you say, Green Growth Brands as a brand company certainly is not in a position to advertise as a Canadian LP. But as a U.S. brand company, should the states continue to fall to the I'm going to call it the regularization of cannabis laws, then Green Growth Brands increasingly is in a sweet spot to establish destination brand stores in those markets, as they've demonstrated expertise in doing. The question is how they're going to get the cannabis to those stores in the US from a Canadian LP. That still doesn't make sense to me either. But again, that's why I look at the whole transaction and I think, well, I think this is an opportunistic play on Green Growth Brands' part to take advantage of the weakness in Aphria as a result of the the short strategists and the stuff they publish, to position the company for a future strategy. So that's my takeaway on it.
Yeah, you make a good point. About the kilograms being produced up in Canada. Obviously, those aren't transferable. There's no way to bring that cannabis down south. So that's sort of another thing that I'm trying to wrap my head around. But definitely, the company has a great track record, as you say, and I'm sure they're looking 4 steps ahead here, not what the current regulations are right now. It's just my understanding that what they do in Canada, or if they purchase a company like Aphria, it will actually affect their branding strategies down in America too, because the Cannabis Act is bindable to what LPs do outside the country. So they have a whole bunch of licenses in Las Vegas and in Nevada, I believe. So yeah, it's an interesting dynamic for sure.
Finally, Ben, can you shed any light on, are there any opportunities out there you see in any LPs or near LPs or cannabis-related companies that might constitute a discount to its peers in any sector? Any companies out there that are catching your eye that are really flying under the radar right now? Yeah,
there is. There's one in particular, and that's the one I wrote about at the beginning of the year when I talked about the best junior plays of 2019, and that is James E. Wagner, Cultivation Corp. I don't believe there's an affiliation there, but I like them for several reasons. First of all, on a valuation basis, the company's only about $70 million valued on a fully diluted basis. Their product doesn't have to be, is not required for irradiation, which is becoming more of a topic in the Twittersphere and out there, because irradiation actually can destroy terpene profiles, which goes into the entourage effect of cannabis. There's the aeroponics growing, and all the growth cycles that they can initiate, up to 6 growing cycles a year. It's very pure. I like the the branding strategy because it is not affected by the Cannabis Act. Similar to what happened with Whistler marijuana, medical marijuana, how they got bought out by that $175 million premium by Aurora Cannabis. I think that has that same sort of potential because of the way they're constructed and because of the potential organic certification that the company is looking to receive. That may or may not happen this year, but a lot of catalysts going for it. 32,000 kilograms by the end of the year annualized, and they should be cash flow positive in the next 3 or 4 months when they go from 7 grow rooms to 24. So if you're looking for value, if you're looking for pretty good upside, maybe 2-3 times upside in the next 18-24 months, I would have to say James E. Wagner would be my top play right now.
Good to know.
Hey, Ben, Ed here. What do you think of the move that Tilray had just prior to all that stock becoming free trading? Major move to the upside, and then right on the day it comes free trading, the stock drops almost the same amount.
Yeah, that was interesting. These free trading moves always play out in different ways. And I think what Tilray did and their majority shareholder Privateer Holdings did was actually very brilliant. So they came out on Friday, January the 11th, and they said that basically, they will not be selling in the first half of 2019. And they own about 75 million shares, by far the largest majority shareholder. So that boosted the stock price up, 15, 16%,
or something.
It actually broke 100. Yeah, maybe it was even more. Yeah, 20%, something like
25,
that.
25, yeah.
But that doesn't mean that, when the lockout actually occurred on the 15th yesterday, it doesn't mean that that all the shares are going to be locked out. So
exactly.
There's still a few million there. People took advantage of the high prices to bring that back down. But the brilliant part is that Privateer Holdings created this buffer where they created this, sort of artificial, boost in share price, and that was buffered by the fall that occurred when the lockout actually occurred. So the net effect is sort of a break-even point. So it was a good way to get some selling out of the way without having a net effect of the stock price not really moving any place, if that makes sense.
Sure. All right, Ben, that's great. Thanks very much for joining us again today. We'll come back to you next week, and have a great weekend. We'll talk to you soon.